Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have very strong supply and resistance, which has just been tested and from which we could expect more potential bearish development to be created here. In fact, we can notice how exactly from here all these two previous rejections to the downside were created. At the moment, the market just tested again this exact same zone from which there is the possibility to see more bearish development being created. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see how we just had a break of structure from a weekly perspective. In fact, we can notice how the market clearly was creating higher highs and higher lows all the time. However, with this move to the downside here, from this high to this low, this is the first time that the market went from creating higher highs and higher lows to now creating lower lows and lower highs. In fact, this move to the downside created this low, which broke below this previous low. And at that point, that previous support was turned resistance. And what we can see, in fact, is that we had a retest of that previous support turned resistance exactly here, and the market started rejecting it to the downside. Now, in rejecting it to the downside, we had once again another break of structure. The market, in fact, broke below this previous support, which is currently acting as resistance, and from which we could expect a deeper test of the level before then getting rejected lower. Now, if we extend this zone to the left, we can see how this was also actually a historical structure level for this market, acting as previous resistance here, preceding all this move to the downside, which was then turned support here, preceding this rejection to the upside, again acted as support here, as we just said, and all this previous resistance, which was turned support, which is now once again turned resistance, is currently acting as resistance and supply, from which we could expect a test of the zone and then to see more bearish continuation, because this is a quite interesting area inside of which we could be looking for some institutional shorting, as we will now look deeper into when we are checking the commitment of traders. So what institutions are doing. Now, dropping down on the daily time frame, what do we see? Now, from a daily perspective, I did speak about gold quite a few times in the past. I spoke about gold when the market was here, explaining all the reasons for which we could expect this move higher, and that is exactly what the market gave us. Then we had this impulse and correction from here. I made another breakdown explaining all the reasons for which we could expect this continuation to the upside, which again is exactly what the market gave us. Then we had this impulse correction. We could expect the market, when I created a breakdown here, to create a higher high and then a rejection to the downside, which is exactly what the market did. And then we had this impulse to the downside and explained all the reasons for which we could expect this correction, and then to see more bearish continuation with the creation of a new daily lower low, which again is exactly what the market did. And by the way, I will link in the description all this previous analysis so you can go and check it out for more free education. Now, what we can see here is that in creating the move to the upside that the market is currently creating, we are also about to form a W formation, specifically in overextended W formation. In fact, we can see from here, we had the move to the downside, correction, move lower, and currently the market is pushing higher. Now, generally speaking, after the creation of an overextended W, what we would expect is for the market to create a move to the downside, to go and complete the pattern at the previous resistance turn support. Now, it is very important to keep in mind that here, if the market will go and create a move higher, creating that daily W formation, it would also be testing this previous weekly support turn resistance, further increasing the probabilities that we could see a rejection lower away from the zone, because essentially what we would have is a daily overextended W formation testing exactly that weekly resistance, from which at that point we could expect a move lower, at least for the completion of the pattern at the previous resistance turn support, but potentially even to continue lower. In fact, with the creation of this overextended W, testing that weekly resistance, that would create a quite interesting setup in which we could see more institutional shorting, which at that point could further increase the probabilities of the move lower. Now, why do I say institutional shorting? Because if we go and see what we have when it comes to the commitment of traders and we check the data precisely for gold, what we can see is that with the last reports, net positions have been massively decreased. In fact, hedge funds, so the biggest players in the market, went from having 195k net positions all the way down to having only 163k net positions. This shows how they have been moving their positioning to the bearish side for this market, with longs getting decreased and shorts getting increased from 61k to 71k, and longs going from 266k to 235k. So hedge funds are clearly, and institutions in general, are clearly shorting gold and closing their longs. This increases the probabilities that with the creation of this overextended W formation testing that weekly resistance, we could have the rejection to the downside, at least for the completion of the W formation at the neckline, which is the completion zone of the pattern itself, which is the previous resistance turn support. So if we will have the creation of this W, how we could be approaching a potential move lower and completion of the pattern. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the completion of the W formation at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment we have a special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the mentorship program, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that there is still time to join before the offer expires and price goes back to normal, and directly from here there is the button to join in order to gain automatically access with the email and password that you would create during the checkout process. So definitely looking forward to have you on board. The link is also in the description. At least you're supposed to go and check it out at transparentfxtrading.com. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.